Delta, Delta, Delta. Both Delta and American Airlines have cracked the top 5 of most popular stocks here on Robinhood. So I thought this would be a great opportunity to talk about them and if I am buying any of the airline stocks. So we will quickly go over the current situation of the airlines and take a look at their financials. I'll be upfront, I see a lot of red flags here, but I do have an alternative airline investment that I think will allow for great gains in the long term. Airlines are basically on life support. They've been having to cut down on the number of flights, running out of places to store unused planes. I wonder if there's a tanker stock that specializes in storing large aircrafts like there is with oil. I'm gonna guess no. They're basically trying their best to survive this whole C-19 travel slump. Demand for travel is down immensely. At the start of April 2019, there are around 2.4 million people being screened daily by the TSA. Now that number is down to just 124,000. That is a huge decline in demand, and that has forced airlines to trim down on the number of flights it operates every day, as well as those flights now need to be booked without the maximum efficiency to uphold social distancing standards. No more trying to cram as many passengers into small seats like a clown car anymore. The only glimmer of hope that these companies had was that the government bailout was passed just a few weeks ago, and that gave them some short-term liquidity, but that's not going to be enough to help them if these issues continue to arise. And to state that this industry has gotten knocked down would just be an understatement. While the rest of the market lost close to 25 to 30%, some airlines are currently down around 70% from their 52-week highs. This creates a window for a potential big gain if airlines can stay in business and get back on track to where they were before. To start off with, American Airlines. They have the largest of the aircraft fleet of all the US major airlines, and they are headquartered in Fort Worth, Texas. Now, normally this is the part where I tell you guys about the company's business model, but let's cut to the chase. These companies basically get you and sometimes your cargo from point A to point B via aircraft. Now I can tell you guys about their horrendous balance sheet. American Airlines currently has a book value that is negative $2.5 billion, and it has a growing $6.1 billion pension liability on its balance sheet. Well, the good news is that when times were pleasant, American Airlines was doing what a responsible company would be doing and setting aside money for a rainy day fund. Oh wait, no, just kidding. They spent $12.5 billion on stock repurchases since 2014. And this is airline companies across the board. 96% of these big four airlines, free cash flow went to be spent on share buybacks in the last 10 years. And this sounds eerily familiar to what aircraft maker Boeing did. Normally I'd say that there's something funny in the water, but I'm starting to suspect that there's something in the air when flying that makes management spend all their money foolishly, as if Boeing needed any more problems with their aircrafts. American Airlines also got a little bit too ahead of themselves when it came to upgrading its fleet. They chose to retire around 48 Boeing 737s and 800s well before it was necessary. And this grew their debt to over $30 billion and gives them any lack of financial flexibility here. One thing that is a major red flag to me is when a company has a lot of debt, as that's going to be stunting their growth options. Currently, this company is burning close to $70 million a day, but don't worry, there's hope. There's hope that they can now get this down to $50 million a day by June. When your hope is that your company is only burning $50 million a day, that is not good light to look out for at the end of the tunnel. This is even worse than when WeWork was losing $219,000 an hour every hour of the day before it IPO'd and eventually didn't IPO. I want my companies making me $70 million a day, not losing it. If I wanted to throw away my money, I got plenty of other ideas. American Airlines may have already hit bankruptcy now if it weren't for the CARES Act, which basically gave them $4.1 billion in grant money, which is basically free money from us taxpayers, as long as they don't fire or furlough their workers through September. And this is totally anecdotal, but my sister's friend is actually a flight attendant for American Airlines, and she said it feels like that the sentiment is that most of the workforce will be fired the very second that they are able to be at the end of September. So not too surprising there. Some of the other stipulations for taking the CARES Act money is that they are required to continue to provide air service across the country, which is why you're seeing flights barely full still flying. And they also have to suspend their dividends and buybacks, as well as executive compensation. That part I'm not going to be complaining too much about. Also guys, if you guys are liking this content, please be sure to hit that like button and subscribe to the channel. It really helps me out and lets me know if you guys like this sort of content. The CARES Act also gives them nearly $2 billion in loans with a low interest rate and nearly $5 billion in Treasury Department loans. And unlike grant money, these they actually will have to be repaid by the company. And this is a company that's already drowning in debt. Delta recently has been in the headlines when Warren Buffett sold a large position of his Delta stake. He stated that there is just way too much uncertainty and that public perception has already changed the way that people will fly in coming years. Delta has been the real breadwinner of the troubled airline stocks pre-C19, having the biggest net income and free cash flow over the other three airline stocks, United and Southwest, over the past 3 years. Delta has also already sent out a memo letting their pilots know that they will need to dramatically reduce the number of pilots that they currently have employed by next year. That's always a great memo to get from your employer, right? Delta does seem to have already hit the apex in terms of lowest number of travelers. This past week, travel was actually up 26% from the week prior and is slowly recovering. Expect those numbers to go up very slowly, especially when tourist hotspots like Florida or Las Vegas reopen in some sort of capacity. Delta is also planning on eliminating some fleet types, which will limit the frequency of training events. It will make operations simpler. It will also cut down on inventory and spare aircrafts, as well as crew. Still, while these signs do look promising for Delta, they are still burning close to $50 million a day so far. But personally, I do think that they seem to be in the best position of the airline stocks. It also got a similar bailout situation as American did, as the Treasury Department has a chance of taking an ownership stake in the airlines at a fixed price within the next 5 years, and that's per the CARES Act. And it's during tough times like this that I especially want to take a closer look at their financial sheets to see which company can survive. Starting off here, we can see that both Delta and American Airlines, as a result of their nearly 70% off their 52-week highs, Delta is now left with a market cap of $12 billion and American Airlines $4 billion, and that is relatively super small compared to most of the companies and stocks that we talk about here on this channel. But hey, losing 70% of your value does that to you. The PE ratio is 3.5 for Delta, and since American Airlines is not profitable anymore, they don't even have a PE ratio. Expect Delta to reach that status here very shortly. Now, revenues for both of these companies are around the $40 billion mark consistently over the last 5 years, but as you guys can see, the revenue growth over the last 5 years is in Delta's favor. But for right now, we're just trying to stay alive, and those numbers are really going to come crumbling down once we have all of fiscal year 20 down. And in terms of cash on hand, after the CARES Act, which was passed on March 27th when President Trump signed it, looks like for Delta, they have $6 billion on hand, and American Airlines has about $4 billion on hand as well. So companies typically report first quarter earnings as of 3/31. So I'm not exactly sure if that trade-off of when the CARES Act passed and all the assistance money, I don't know exactly when that trade-off happened. But these were the numbers that I got off of macro trends, so I'm going to assume that they are correct. And long-term debt, $18 billion and $22 billion. I know American Airlines is actually closer to $30 billion now, which is just absolutely insane compared to that cash on hand number. And you don't want long-term debt. That's going to really hinder any prospect of you being able to continue to flourish and expand your business if you are busy paying off debt as well as the interest. American Airlines has to pay over $1 billion in interest every year. And then we get to debt to equity ratio. This one will show us the percent of company financing that comes from creditors and investors versus wholly owned. So a decent debt to equity ratio is around 1 to 1.5, but that's going to depend on the industry. So we can see Delta's isn't too bad there at 1.61, but American Airlines is a negative 8.18. So a company might have a negative debt to equity ratio, and that is a huge warning sign to an investor that the company is in huge financial distress. And this would occur when a company has interest rates on its debts that are greater than the return on investment, meaning the company has a negative net worth. That doesn't really sound like a company that I would want to invest in. Let's keep going here. Current ratio. Current ratio will give us an indication if a firm has enough resources to meet its short-term obligations. Usually a ratio between 1.2 and 2 is solid. As you can see, both of these companies are doing terrible in this category as well. I wasn't kidding when I said that these airline companies have bad balance sheets. And right now when the economy is not doing so hot, it just seems like there's one bad event after another for these airline companies, some of them that are not even obviously in their control. So it's just really an unfortunate situation. That's why I really like it when my companies, they have a lot of cash on their books that can help them in rainy day situations like this. And then we also have current liabilities. Both of the companies have $19 billion in short-term liabilities, which is also a little bit concerning. Now, I just personally see way too many red flags here, and we've only looked at some of their quick financial metrics. I also think part of the reason why Warren Buffett left this industry is that for him to recoup the money that his company initially paid, it's going to take such a long time for these stocks to one day maybe recover to the point that he bought them at, that he would no longer be the face of the company by the time that happens. And Warren Buffett turns 90 this year. And while I have no doubt that his mind is as sharp as it's ever been, and evidence of this is somehow he spoke for 5 hours straight with his stamina to be able to present at the Berkshire meeting, he's on the wrong side of Father Time. And I honestly do think that had a little bit to do with why he sold his airline stocks. Obviously, he does have a whole succession plan with what's going to happen once he either retires or unfortunately passes away with Berkshire, and who's going to take over after he's gone. Airlines also operate in one of the lowest profit margin industries. They are always trying to undercut one another, which comes at the expense of their bottom line. Some of these include airline rewards programs and loyalty revenue. Airlines team up with credit card companies, exchanging miles for cash. So airlines would have to record a liability for future travel. People are not traveling in general, let alone signing up for credit cards at this time. Well, most smart individuals aren't. American Airlines has $8.6 billion in frequent flyer miles outstanding, which is over 2 times their market cap. And what I think Buffett was alluding to in his statement on why he sold the stocks was that no one knows when people will be comfortable flying again. Travel, sure, it might be essential, but other than maybe international flights, there are some more tiresome alternatives to traveling by airplane. Also, I'm going to predict now that businesses see how much work can get done virtually, travel budgets by companies in the future will get cut. It might even be a few years before we see travel volume return to pre-C-19 levels. Just like maybe people were a little hesitant to fly again after 9/11. And I don't think I would want to wait that long to hold on to these companies that are already on life support to begin with. While I'm sure that the US government wouldn't let all of the airline companies go bankrupt, I think it's definitely possible that one of the big four will. And instead of taking that risk, I think a good alternative to this would be investing in an ETF, such as JETS. Now, JETS is an ETF that specializes in airlines. The JETS ETF has grown 10 times in size, despite the fund declining 60% in value in the last 3 months. It has a mix, including about 80% US companies and 20% international companies. Its expense ratio is a little high for an ETF at 60 basis points, but then again, you are getting good diversification here. Another cool thing about this ETF is that it allows you to invest in sectors that are related to air travel, such as air freight stocks, aerospace and defense stocks, as well as airport stocks. While individual stocks can go to zero, it's essentially impossible for an ETF to go to zero unless one day the JETS do another butt fumble. Plus, JETS pays a small dividend while you wait for airlines to one day rebound. So I personally wouldn't be investing in any speculative airline stocks. I just think there's plenty of other great companies that are still profitable, that are down considerably from their highs, and they provide much more stability, and the chances of making a profit out there are very much alive, and also they're not prohibited from the government from paying me a dividend. But let me know if you agree or disagree with me by cursing me out in the comments below.